Hi guys, hope you guys are good and welcome back to today's video where we'll be doing a end of week video outlook, right? And now there are multiple reasons why this video is very important. The first one is today is Friday and we are looking forward to trading today. So what this video will do is it will help us to understand what we can anticipate in today's trading. But most importantly, it will help us to summarize what has been happening in this week's worth of trading, right? And with those insights, it will give us an understanding or set a tone for us into having to understand what we can anticipate in next week's trading as well, right? So with that being said, if you guys happen to find the information shared in today's video valuable, I'd appreciate it for you guys on YouTube to subscribe to my YouTube channel. And I'd also appreciate it if you'd follow me on my TradingView profile as well. And now the reason for that is because I do drop my day-to-day analysis, right? So it would be beneficial for you to follow me due to the fact that you get to see what I am seeing on that particular day. And you can take that information and go and further investigate it, right? Now, in terms of this week's trading, I only posted one analysis and you'll see that it was completely wrong. And the reason I only posted one is due to the fact that on Sunday, I did make a video, a weekly outlook video, right? In terms of what I would be anticipating in this week's trading. And if you guys did see that video, you'd see that the things that I was anticipating did not occur. My analysis was essentially wrong, right? And of course, we see that the market drew further into these areas over here, and we will talk through that in today's video, right? So I only posted one analysis due to the fact that the moment we broke that high over there, I already had an understanding that the market was looking forward to having to do something else, right? So I decided to just wait out this week, right? And then once it reached areas of importance, that's when I got back into it, right? So hence today's video. So with that being said, let's get into it, right? Okay, cool. So we'll start off on the weekly time frame on the DXY just to get a bit of context, right? If you do want an in-depth video analysis, I will attach that to this video. But with that being said, we understand that the weekly time frame is or has been bullish in terms of institutional order flow, and we understand that price was printing towards the upside, and then we took these buy stops over here that resulted in the market having to draw towards internal range liquidity. So from external range, we'd like to see the market draw towards internal range liquidity. Now, it drew to a very important area over here, which is regarded as a institutional support zone, right? Which is this mitigation block, right? So we understand that this area has been respected multiple times, and us having to see the market draw all the way down there and then getting to see this rejection gives us an understanding that this area over here is a very strong area of importance, right? So this area as well is aligned with this weekly bullish order block, right? Which is also giving us more reason to see the market then respect this zone over here and continue towards the upside. So we understand that once you're seeing a overlay of PDRAs like this over here, it just gives you more confluence, right? That area is a strong area of importance, right? So with that being said, on the weekly time frame, we're just getting more information into having to see the market draw higher as to reach these buy stops over here and then eventually reach our long-term zone over there, right? But with that being said, let's go on to the daily time frame. Okay, cool. So on the daily time frame, we understand that whatever exists above here is considered as premium prices. Whatever exists below this is considered as discount prices, right? So we understand that we've been at a premium for quite some time. That resulted in the market coming all the way down here as to fill this fair value gap, right? So in the weekly outlook video, I was convinced that this was enough to see the market continue towards the upside as to reach into our objectives, right? And also we had filled this mitigation block as well, right? But we can see that from a discount, essentially what happened was the market just drew into premium prices into this daily bearish order block, which exists in premium. Smart money sold off of that region at a premium, so it only made sense for them to be taking profits at a discount, right? So that's how we saw this heavy movement of price action in this week's worth of trading into a deeper discount. So as it reached into a deeper discount, we understand that we see that there's this daily bullish order block, which is aligned with that weekly mitigation block, right? And like I said, once you start to see a large amount of PD arrays aligning with each other, that gives you an understanding that that area over there is a very important area, right? And in this situation, it's a very important area of support, right? So this offer this area over here, we understand as well that this daily fair value gap was filled, right? Which was an area of fair value, right? So we understand as well areas of fair value. I've spoken through this multiple times that areas of fair value are areas in which smart money will be looking forward to taking their profits. So they sold at a deep premium, right? So it only makes sense for them to be taking profits at areas of fair value, which are regarded as areas of inefficiency, such as fair value gaps, liquidity voids, and all of those sorts of things. So we understand they pushed it into a deeper discount price. They completely filled this daily fair value gap over here, right? And what also exists at that discount price? These sell stops. So once they've booked their orders at this discount, they have sell stops to buy against at an area of fair value, which is in discount prices, right? So hence that's why we start to see the market start to draw towards the upside. Smart money is buying against these sell stops. Now, if we regard these sell stops as external range liquidity, we then want to see the market draw towards internal range liquidity. So what are those areas? Those areas are areas like fair value gaps, in which right now we are looking forward to filling this area over here, right? But most importantly, I'm looking at this area over here, this daily bearish order block, right? And we'll get into why exactly I'm looking at that area on the H4 time frame, right? But with this understanding alone, right? And all of these confluences over here, we're getting an understanding that the market is looking forward to pushing towards the upside, right? So this area is of importance. That's the first objective that I'm looking forward to having to see the market draw to, and I'm very confident in that. And then potentially after that, we may see the market draw into premium prices as to reach these buy stops over here, then eventually all the way up there, and then our long-term objective, which is up there. But we also need to consider the fact that there is a likelihood of having to see the market draw all the way up here and then continue towards the downside. We shouldn't neglect that possibility, right? Because we understand that we're working with probabilities. But as far as that is concerned, once we see the market draw all the way up here and we get confirmations to continue down towards the downside, then we'll respect that idea. But like I said, there's way too much confluence that's advocating for the market having to continue towards the upside. But with that being said, let's go on to the H4 timeframe. Okay, cool. So on the H4, we understand, of course, to give you guys a bit of reference, this is that weekly mitigation block as well as the daily bullish order block. We understand that in this week's worth of trading, we left a premium point as to reach into deep discounts where now we understand that smart money is looking to buy against these sell stops. Hence, that's why we're seeing a heavy movement of price action towards the upside, right? Now, let's get into why I was saying that daily bearish order block is of importance, right? Why we'd want to see the market draw all the way up there. Now, the reason for that is because after reaching into these premium prices, you'll see that once we reach into these discount prices, we got a heavy movement of just sell side delivery. And what I mean by that is notice how this was an area of efficiency, this last bullish candle over here. And then what you saw was black candles towards the downside, heavy sell side delivery, heavy volatility started to step in. You have a bit of efficient price delivery here. And then you just saw heavy only one-sided delivery towards the downside. Now we understand that the market is always trying to move efficiently, right? So areas of inefficiencies like these, right, the market in future will look to fill that. Same thing applies for gaps in the market, right? That's those gaps are, you know, areas of importance that like to attract the market, right? So regard these areas as well as like gaps or in liquidity, right? So only sell side was delivered, hence you having to see the market push all the way up there. Now look at this. Why are these areas very important? Like I spoke through this on a daily time frame. Areas of inefficiencies are areas where smart money will look to take profits at, will look to book their orders. So we understand that they bought at a deep discount against these sell stops, right? What are they going to be looking forward to doing? To taking profits at a premium. Now, what exists at the premium? We understand that we have these liquidity voids, which are those inefficiencies. Just to go through this liquidity void, this is the last time we saw a bullish buy side delivery over here, and then we saw sell side delivery. Then we got buy side delivery. So there's a void over here, right? Only sell side was delivered. So there's a buy side inefficiency. And then you had a bit of efficient price action over there. And then what you saw was only sell side delivery until all the way down there. So as we're starting to fill this, right? The liquidity void is starting to get filled. So hence that's why we would like to fill all of that. But now this inefficiency over here as well is at a premium as well. And what do we also have at a premium? We have this H4 bearish order block. This is that equilibrium point, right? So that premium PDRA is what we'd like to see the market draw into. Why? Because those are nice areas for smart money to look forward to booking their orders, to take profits at. They bought at a discount, so they'd most likely be taking profits at a premium. So as far as reaching that point, I'm very confident that the market eventually would like to reach that area over there. Most importantly, that H4 bearish order block. And then as far as having to see the market continue will get more confluence for that. So what I'm saying is in these next few days, we need to, be very considerate in terms of our expectations, you know, in terms of the market, right? And we need to be looking forward to a lot of confirmations and confluences as to give us an understanding in terms of what we can anticipate. But with that being said, let's go on to GBPUSD, right? So we have an understanding of what we can anticipate on the dollar. We're looking forward to bullish price action. So let's see what's happening on GBPUSD. Okay, cool. So on the daily time frame on GBPUSD, we understand that price uh, at some point drew into a discount area of importance over here. We see that there is a break over here, which is also a very strong area of institutional support, right? Because at some point, smart money sold this candle towards the downside. And once you start to see the market trade above that point, those sell orders are in loss. So eventually you want to see smart money draw the market back there, mitigate those orders and initiate new buying, right? So these are areas that I didn't consider in Sunday's video, right? But these things happen. It happens. It happens that at times you're wrong, which isn't a problem. So we understand that drew further into a discount price. It took these sell stops over here at a discount price, which is perfect, right? For smart money to initiate buying into the market. So that resulted in the market pushing further into a deep premium. Price action is very beautiful. I mean, when you start to look at all of these things, right, you start to see how intricate these things are, right? So in a deeper premium, we've taken these premium buy stops as well, and what reach into a daily rejection block, right? So off of these areas, we understand that we've taken external range liquidity. We then want to see the market draw towards internal range liquidity, areas such as fair value gaps, liquidity voids, and bullish order blocks, right? We have an understanding that DXY is bullish. So on GBPUSD, we'd like to see the opposite of that. We'd like to see the market bearish, right? Starting to give us bearish ideas. So we understand as well, just to give you guys a bit of context, in terms of grading swings. I've spoken through this multiple times. What grading swings will do is you divide all of these into quarters. We understand that eventually that is our draw over there. So you divide it into quarters. And once you start to see alignment of PDRAs at these areas, those areas become areas of importance for you to be looking for. It just adds more confluence to your PDRAs, right? So it may happen at some point that we see the market draw higher to take the buy stops up here, and we'd regard that as a turtle soup condition, and we just sell against that, right? But all of those things we'll look forward to. But at the moment, what's very important is we understand that the market drew into this rejection block, and we'd like to see the market draw as to fill this fair value gap. So in today's trading, I'm looking forward to the market having to fill this fair value gap over here, right? And this goes into how to select proper fair value gaps. How to do that is you want to look at the price action. notice this candle over here. This is the last point where you started to see sell side delivery, right? So there's sell side being delivered over here, and then buy side was delivered, right? Now that's the last point in which sell side was delivered, so you mark that off. Now where's the other point in which sell side was delivered? This candle's low over here, right? Now the difference between that and this point over here, that's your fair value gap. So immediately you start to see that this area over here is your fair value gap, and that's your important region that you'd at least want to see the market draw into, right? So in terms of today's trading, I'm looking forward to having to see the market draw back up here to this candle's high as to fill this inefficiency. Now, I am a day trader, so I can potentially catch a 2, 3, 4 hour off of that move over there, right? And of course, this region over here is of importance, but we also have another point of inefficiency being this liquidity void all the way down here. So we understand that's the last point where we saw, sell side delivery. And then after that, we got heavy movements towards the upside resulted in this inefficiency, right? So you have two areas of inefficiencies, that fair value gap as well as this liquidity void. So this area over here is also an area of importance, right? So if you get more confluence to see the market continue possibly into next week's trading, we then want to see the market draw into this area over here if this area isn't respected, right? And we understand as well, GBPUSD on a long-term perspective is bearish. So we then want to see, there's also still a likelihood of having to see the market draw further into discount areas, right? Into these PDRAs such as the sell stops and all of that. But let's get into, having to understand what we can anticipate in today's trading, right? We'll get into all of those narratives when we do the weekly outlook for next week, right? So with that being said, let's go into our lower time frames. Okay, cool. So we are on the M15 time frame, right? And just to give you guys a bit of context, right? This is that inefficiency, that is our target. So in today's trading, we'd like to see the market fill that. So that will be our TP over there once we got confirmations to continue the market lower. And already we're starting to see that, right? Give you guys a bit of context. What you're seeing here is a support zone, right? And smart money is intentionally doing this. Why? Because support and resistance traders are going to be buying this. Where are their stop losses? At these lows. What are those regarded as? Sell stops. So eventually you're going to see smart money, once it pushes into PDRAs, push the market heavily towards the downside and absorb all of these sell stops and fill that inefficiency, right? So these sell stops will be used as will be used for them to order pair, right? To book their profits as they reach this area of fair value, right? So to give you guys a bit of context, what's been happening, of course, in this morning, I did miss out on trading over here. Nice sell off towards the downside. We understand that price pushed all the way up here as to fill this fair value gap, right? And I think I should do a video on fair value gaps, just talking on this price action. I'll do another video right after this, I think, just talking through all of that information over there. And we understand that the market pushed back into an area of a fair value gap. What are we seeing? This is the last point where we saw buy side delivered, right? And then again, that's the last point where we see buy side delivered off of this candle. So the difference between that, there's an inefficiency, which is what? There's a buy side inefficiency. So that's why you see the market draw back into that, right? And then what's aligned to that area as well, this mitigation block, right? So we see the market respect that. What's above that high? Buy stops. So the market takes those buy stops, and then what do you see? Heavy selling towards the downside. So already you're having confirmations that you could continue the market towards the downside, right? So if you're seeing any PDRAs off of the 5-minute, 2-minute, whatnot, you can sell off of that. Or you could just wait for price to push into this fair value gap, potentially look for confirmation entries to continue the market lower. So all of that is up to you. You still have this order block as well. You can also see the market draw into further premium prices as to reach all the way up there. So you want to look at the market critically and select areas of importance, right? And then sell off of those areas. So concerning the fair value gap videos and all of that, I think I will release a video just based on fair value gaps and liquidity voids, how to mark them properly and all of that. I will, compile a bit of information and examples to give you guys and talk through all of that. But if you're keen on that, please let me know in the comment section. But in terms of today's trading, happy trading and kind regards, the architect.